Alright, traders. Welcome back to TakePropips, where today, we're diving deep into one of the most fundamental tools in technical analysis, trend lines. Now, trend lines might seem simple, but when used correctly, they can transform your trading game, especially in the Forex market where trends can shift in an instant. Stick around, because by the end of this video, you'll know exactly how to draw, utilize, and maximize trend lines for better entries, exits, and overall trade management. So, first off, let's talk about what a trend line really is. A trend line is simply a line that you draw on your chart to connect a series of price points, typically swing highs or lows. In an uptrend, you connect the lows to identify support, and in a downtrend, you connect the highs to identify resistance. These lines give you a visual representation of the trend direction, and more importantly, potential areas where price might bounce, reverse, or even break through. But here's where things get interesting. Drawing trend lines isn't just about connecting random points. The key is to identify major highs and lows that show significant moves in the market. These are your anchors, and they're critical in establishing a trend line that actually holds weight in the market. Once you have at least 2 to 3 anchor points aligned, you can start to use that line to guide your trading decisions. Now, the biggest mistake that many traders make is relying solely on trend lines for their trading decisions. But here's a tip. Always pair your trend lines with other forms of analysis. Think of them as a guide, not a strict rule. For example, if you're in an uptrend and price is approaching your trend line from above, this could be an opportunity to enter a long position if other indicators, like moving averages or volume, confirm a potential bounce. The more confluence you have around that trend line, the stronger the signal becomes. So, let's break down some practical strategies to make the most out of trend lines in your Forex trading. First strategy. Using trend line bounces. When price approaches a trend line that you've drawn, look for a bounce. This is one of the simplest and most effective ways to trade with trend lines. Imagine you're in a strong uptrend and price pulls back towards your support trend line. Watch how price behaves at this level. If it touches or gets close, and then starts moving back up, that's your bounce. This can be a great entry point, especially if you're seeing bullish candlestick patterns like a hammer or engulfing candle form right around that line. Now, you might wonder, how do I manage my risk in this scenario? Well, that's where our Trading Management Solutions EA can come into play. This tool can help you set up stop losses just below the trend line for those bounces and even assist with partial close options if you're looking to secure profits early. It's all about managing the trade efficiently while reducing your exposure in case the trend line doesn't hold. Second strategy. Trend line breakouts. Another powerful strategy is the trend line breakout. A breakout occurs when price breaks through a trend line with strong momentum. Now, here's the trick. Not every breakout is going to lead to a trend reversal. Sometimes, it's just a temporary blip before the trend continues. So how do you know when a breakout is valid? A good rule of thumb is to look for increased volume or volatility during the breakout. For example, if price is moving steadily upwards and suddenly breaks below a well-respected trend line with high volume, that could indicate a trend reversal. Here's another tool you can add to your arsenal. The Trend Scanner on our Trading Management Solutions EA can help you spot these breakouts across multiple pairs and timeframes, making it easier to catch potential reversals as they happen. After a confirmed breakout, you could wait for price to retest the trend line from the other side. If it holds as a new resistance, then you have a stronger case for entering a trade in the opposite direction of the original trend. Third strategy. Multi-timeframe trend lines. Alright. Here's an advanced trick that can give you an edge: multi-timeframe trend lines. A trend line that holds on the daily chart is likely to be more reliable than one on a 5-minute chart. So, what if you combined both? Drawing trend lines on higher timeframes, like the daily or weekly, can help you identify long-term trends, while shorter timeframes like the 1-hour or 4-hour can be used to pinpoint entries and exits. For example, say you've drawn an upward trend line on the daily chart, but you notice on the 1-hour chart, price is bouncing off a trend line in the opposite direction. This could indicate a shorter-term pullback within a larger trend. By using our EA, you can set up alerts on these levels, so you don't miss any of these entry points, regardless of which time frame you're monitoring. This can save you tons of time and keep you in tune with both the bigger picture and the finer details. Fourth strategy. Dynamic trend lines with the TakePropips EA. Now, let's add an extra layer to your trading. With the Trading Management Solutions EA, you don't need to manually redraw trend lines every time there's a minor change in price structure. The EA's Dynamic Trend Line tool automatically adjusts to major swing highs and lows, helping you identify real-time trend shifts without the manual hassle. This is especially helpful in fast-moving markets where trends evolve quickly, like during major news events or high volatility sessions. By setting your trend lines to adjust dynamically, you can focus on monitoring confirmations for trend changes rather than worrying about missing out on trend shifts. Fifth strategy. Trend lines for stop losses and take profits. Trend lines aren't just great for entries. They can be powerful tools for setting stop losses and take profits. Imagine you're in a trade following an uptrend and want to let your profits run. One approach is to use a trend line as a trailing stop. As price climbs along your trend line, you can move your stop loss along with it. If the price breaks the trend line, you exit, securing your profits and avoiding a reversal. With the Trading Management Solutions EA, this process is even easier. You can set trailing stops and even automate partial closes at specific levels along the trend line. This way, you don't have to worry about constantly adjusting your trades. Just set it, monitor occasionally, and let the EA handle the heavy lifting. This strategy not only helps in maximizing profits but also limits the impact of sudden reversals against your trend. Bonus tip. Combining trend lines with support and resistance. Another way to make trend lines even more effective is by combining them with horizontal support and resistance levels. When a trend line intersects a key support or resistance level, it creates a high probability zone for potential reversals or breakouts. For instance, if an uptrend line aligns with a horizontal support level, this could be a particularly strong area to look for buying opportunities, especially if other indicators support the trade. You can set up alerts for these confluence zones using our EA, so you're notified as soon as price approaches these critical areas. Combining horizontal levels with trend lines enhances your trading edge, helping you focus on the highest probability setups while reducing the noise. Wrapping up trend lines are more than just lines on a chart. They're powerful tools that can guide your trades, help you spot reversals, and enhance your overall market understanding. By applying these strategies, you're not just trading with trend lines, you're aligning with the rhythm of the market. And if you're serious about mastering these techniques, having a robust tool like our Trading Management Solutions EA can make all the difference. Not only can it automate your entries and exits, but it can also assist with monitoring trend changes, setting dynamic stops, and managing risk across multiple pairs. Whether you're a beginner or a seasoned trader, this tool complements your technical skills and helps you stay on top of market moves effortlessly. So, the next time you draw a trend line, remember, it's not just about connecting points, it's about unlocking market insights and sharpening your trading decisions. Thanks for tuning in to TakePropips. Don't forget to like, subscribe, and hit that notification bell to stay updated on all things Forex. Until next time, happy trading!